Now the odd thing is that since I've started recording on two laptops, I've not had the problem of the interrupted recording on the primary laptop. So I guess that's just what you have to do is show that you're not going to be defeated by a machine. And then they're finding new ways, plotting new ways to get me. So we'll see how that goes.
That's
This
good.
is the small group check-in for February 12th, 2024 from Kansas City on the Super Bowl champions. Here we go. All right, who's up?
I can go first.
Okay, Juan Carlos, go ahead.
All right. So, been working on identifying where profits can be found in the market using the frog quality number and the 10-day high-low and range that with noise. And I am already encapsulating the market classification and risk-reward indicators, trying to consolidate and come down to the set I'll be using. The big progress this week was, it feels like I took off my sunglasses and started seeing what I didn't see before, and how to correlate market classification with profits from a strategy, and it's, for me, it's mind blowing. It's like a new avenue to explore and see if I can finally make some profits with this. I'll stop there for a second, and I'm going to share my screen to show what I uncover. And the share screen is right here. So this we looked a little bit last time, in which I have the RIC against the S&P 500, the NDX, how it behaves and where it is, the slope stat using the 90 and the 30, and using the histograms of the difference of the slopes to see, as they're getting close or expanding. And what I find absolutely fantastic about this is that there's not much lag. It's very, very on point to what's going in the market, and very difficult to find that. For me, it's like brand new. Then from last week, I had developed this indicator for market classification using the 9 bins and the 200 moving average. So on the down, it's bear volatile, and up is bull volatile, and everything in between each line. There's nine bins in there. And then I was looking at the next day profits of holding overnight, and I did find that the profits, the direction of the breakout continues for at least 2 or 3 days. So if you get an initial breakout, like let's say here, there is well, it's not an SSC, but I guess the owl down here. And
Yep.
if you notice that the breakout, there is like 5 or 6 consecutive positive gaps in the direction of the trade as it's going up. And then it starts diminishing the size and going opposite as the trend starts to go to an end. So definitely the first few days on a swing, one should keep it overnight. Same to the downside. The first 3 to 4 days are in the direction of the trade, which I found very interesting. So that's
Let me jump in right there and just say that historically, and I'm going back to around 2003, 2007, which was after the internet bubble, went way up and then had the big collapse, and then there was about 4 or 5 years in a row between 2003 and the big crisis in 2008, where there was a grinding market that was coming out of a big sell-off. And the swing trades in those days were lasting 7 to 10 days.
Oh, wow.
And I'm noticing lately that, you know, there's a significant number of 1 to 3 day swings, and it's technically not even a swing trade, I guess, by classical definitions.
Hmm.
It's an overnight trade, and it can be a couple days in a row. But there does seem to be a new category of um, immediate reaction to bad news or surprises or oversold. But that those anomalies are being erased much more quickly, whereas it used to take 2 full weeks to unwind a sell-off. It seems like those are those are being erased much more quickly. Let me also ask you on your price chart above, where you have the very smooth channel with a dashed white line
Mhm.
and then a boundary with the green and the red. Is that the 200-day moving average plus or minus 2?
Yes.
Okay, just want to make sure. I
Yes.
wanted to be clear. And then you're using the bright white or gray line. What is that
90.
what is that indicator?
That's the 30.
That's the RL30.
Ah,
Okay, and then and what is the darker blue?
this one, wait, give me a second. It's an average. It's a moving average. It's the river. It's the middle of the
Okay,
river.
that's the middle. That's the middle of the river.
Mhm. And
So
then the
that's the
color
10.
one is the 30 with the MACD.
Okay, so the middle of the river is solid blue.
Mhm.
So that's essentially the middle of the dragon. And then the color coded four color, that's the RL10.
This one,
Yeah.
that's the 30, the 90 with the MACD.
Oh, okay, okay. So that's a color coded 90.
Yes.
Okay. Do we have an RL10 in there?
Yeah, it's a super light here, light
Ah,
blue,
got it. I got it. Got it.
red.
So the solid white is green. Okay, that's the 30. Yeah. Yeah, I'm noticing the relationship between the white line, which is the RL30, and then the middle of the river, which is the blue. And you just notice that the RLs move fast, they turn faster and move farther,
Mhm.
which is an important part of the strategy. And then I want you to just make a note to yourself to take a look at the moments when the RL30 has gone into the winter and then reversed, and the moment that it crosses the blue line, the SMA 30. So as the separate deal, I want you to take like a bright yellow circle
Mhm.
and just drop it on every crossover between the RL30 and the SMA 30, and just stare at it for about an hour and see what it does. See what it does to your worldview.
All right, will do.
Okay.
Uh,
Okay. Back to you. Just wanted to
so
clarify.
cool. I did another indicator here. Well, I'll just talk about it and show it in another screen, which was the width of the 10-day high and low
Yeah.
compared to how many standard deviations of the range stat from that location to the high and to the low, and see
Oh, okay.
the
So
returns.
you're taking the width of the 10-day channel,
Mhm.
width of the 10-day channel divided by range stat.
Exactly. And seeing the distance from
Okay.
the close to each one, and see how many standard deviations do we get inside as a minimum manageable risk. And I was blown away to find that the S&P, or at least the SPY, had only like 3 days on the dailies that was
Yeah.
higher than 3. So pretty much you shouldn't be trading that in a daily bar, I guess. Maybe only intraday or longer term than multiple days.
Yeah. What the other part of it what the other thing that'll lead you to is, uh, you probably don't want to swing trade it every day. But what you want to do is take a look at really exceptional trade locations when it's near the previous 10-day high or low.
Mhm.
That can be a significant turning point. You can, if it does turn,
Mm.
it's going to be it'll be the wide. You're going to get the entire channel. And if it breaks, you're going to get the big drop off, and that's one of the reasons we like that as part of the trade location in the sniper.
Yeah.
Is that when you get near the extreme condition, and then in bull markets, when price uh, is oversold on a 10-day, that's a really good time to be alert for a reversal buy on dip opportunity. You want to.
Mm.
In fact, the Larry Connors had done some work during the internet bubble, which said that if you bought 10-day breakouts and sold 10-day lows, in other words, you were basically buying a breakout and then using the width of that channel as your initial stop.
Hmm.
If you bought a new 10-day high and then sold it when it made a new 10-day low, you lost money in the market. But if you bought the 10-day low and sold a 10-day high, a new 10-day high, then you made more money than buy and hold. So it's the buying opposite of the herd,
Hmm.
buying pain and selling joy in a bull market is useful. And that aligns with what we know from that mechanical swing trade system, the channeling system,
Mhm.
which has like 2 rules. Market must be in a bull condition, good. And on a Williams percent R or a 10-day NDX, it goes to oversold. You buy tomorrow's open.
Mhm.
Done. So, yeah, that's why I think it's interesting to note that reinforces the idea there of the generic move in the S&P is hard to trade on
Yes.
a swing, but you really are rewarded by paying attention to critical turning points, critical states. You're affirming what we know about critical states.
Yep.
Okay, back to you. Go ahead.
So it was mind blowing for me because I've lost a lot of money trying to trade the ES.
Mm-hmm.
I guess now I know why. So that was magical for me to see that. So then I've been trading Alcoa with a trading strategy, a little bit like what you do on the nightly podcast on the swing.
Mm-hmm.
Probably a little shorter time frame using the hybrid frog. And I had a very good term in November, October timeframe. So, but it stopped making money through December and January. Now it's starting to catch up again. But then, so I created the 9 bin, which is based on the S&P 500. And I put it down here.
Mm-hmm.
Created, when I brought in the VIX, risk C, I created the slope indicator that we saw on the S&P 500 here.
Mm-hmm.
So these 3 are based on the S&P 500. And this one is the 5-day, what's that? The width of the 5-day on a score. And then down here is the frog quality number. So I'm missing one indicator here. Let me turn it on. test. I believe it's test. Yes. This is the one I'm working. This is the one of the 10-day high-low and the distance between one or the other. On the downside is for a short on a 10-day high, distance to the low. And the yellow tips is when it breaks out on a new 10-day low or a new 10-day high. So while looking at this, it suddenly caught my eye that my equity line, which is right under the Alcoa chart, it's going up as the market classification became bear between quiet and volatile, and lost money and went sideways when it became bull, volatile, normal, and even sideways. I was blown away to see this on a chart, because the higher the highest steepness of the equity line is right on the bear side. True. And it's very consistent that as soon as we become bears, it starts making money. I don't have more data to January, December in this area here, but definitely from what is it? This is 21. It's very clear what's going on with market classification. So I found a use for it right on this strategy. I'm trying to make it a little bigger to see the situation. So yeah, as it became bear, a bull, and between bull, volatile, and quiet, losing money consistently. As soon as it became bear, straight up. And now that it went sideways in a way, it started to go down again. So I'd say this portion would be something like around here, this sideways market on here. So I found that the big moves in my equity line corresponded with coming out of a high volatility into low volatility. Yeah, it would be between normal and quiet, and coming back into bull is when I had the big jumps in my equity curve. Also, as the market fell, meaning the RL 30 started to come down, the profits started to go down, and vice versa. So very excited about to see this and see it working on real time on something.
Well, especially if it's letting you make money in bears.
Yes.
That's a big advantage.
All right, so that's
Very
that.
cool.
Next step is going to be putting it all together and finding different measurements for minimum manageable risk with ATR and range stat, and probably the configuration between RL10 and PSAR, the distance of the RL10 and the PSAR, and start playing with that and see what I find.
Yeah, I think you're going to want to, as quickly as you can, come to some agreement with yourself about what a standard risk size is, that you can just play it like a poker chip, over and over again, so that and with a standard position size and a standard dollars at risk, so that you can just get in the habit of just playing the hand, playing the next trade, and being very, very smooth on that. That will allow you to normalize your risk across multiple trades, and that will simplify a lot of your accounting and your risk management.
Cool. Next step. Yes. Thank you.
Especially if you've got systems that have pretty good frequency. The more frequent your trades are, the sooner you want to get to standard chip size, standard bet size. So you're firing the same bullet each time. Okay, looking good.
Thank you.
Next man.
Sure, I can go. I'll go. Go ahead. Am I good, Jeff?
No, go ahead.
Okay. Um, well, I am continuing to work on the prepare phase. What I'm presenting to myself and how I'm presenting it to myself. And um, I've made a lot of progress with that as far as how I'm adjusting my charts and incorporating the things that Ken's talked about with me the last week or two. And I've done something that I usually don't do, which is I'm just trying a whole bunch of different things just to see how they feel. As far as what I'm looking at and adjusting the charts. This morning, for example, I just looked at what the bottom handful of names were that were making the biggest move down, and tried trading those. One of the things that I've noticed it seems to happen is if I'll do a whole lot of work the night before, and then when the market opens, everything looks completely different. The charts look completely different. And sometimes I feel like, I did all that work and it didn't necessarily advance because what I'm trading in the moment, it seems to look different. And I mean, ultimately, I think that's what I really want to do on 3-minute charts is, get on what's moving now. So I have to make sure that I can see that. So, as far as the next step, I'm making some adjustments to expand my span of control so I can be looking at more things and trading more things at once. I don't need to be trading a lot of names, but I'm making some adjustments and have some ideas of what I can do to make sure that I'm seeing everything. So I probably need to figure out how to use the daily chart a little bit, the daily report PDF a little bit better than I have been in that regard. But yeah, that's still kind of the main thing that I'm working on. The basic trading patterns, I feel like I certainly can do a better job of trading them, but I'm pretty comfortable with them. So I feel like the how to trade, I'm getting a lot better, and it's the what to trade is a little bit more limiting to me, that I need to have catch up with that.
On the big sell-off ones, I guess what I would have is if I had to have a standard scale, I think from the open I would hang 3 boxes that were equal to an R10. I would go like an R10 box, a second one, and a third one.
Mhm.
Because the second one is your R5, and the third one is probably a frog box. But I'd have like 1, 2, and 3 boxes. And then the fourth one, the fourth line I would have would be the fail stat. Just to say, hey, all other things being equal, if it turns there, that's the most normal thing that could happen. And then the fifth line I would have is the range stat to the downside, just as sort of a standard calibration, because from the open, you're going to want to enter after either the first or the second or the third line of selling, right? You've got to be in by one of those 3 levels to take advantage of a gap down and sell an immediate sell-off. And then the other 2 lines, the fail stat and the range stat, sort of marks off what is the normal turning point, and then what is the maximum reasonable sell-off from the open. So between those 2 lines, it tells you what kind of a day it is going to be. Like from the open, if it goes to the fail stat and then starts reversing, well, then maybe it's a morning hook day. But if it blows through the fail stat, the next stop is the range stat. So that sort of tells you how wide the road is, how wide the channel kind
Well,
of
what
is.
I traded this morning, I actually did that. That's one of the the three R10s down is one of Grist criteria for SSCs, and
Yeah.
I've incorporated that in. Well, like what happened this morning is I ended up trading IBM and what was the other one? I think it was Apple. And I got the move down. I watched the move down. I saw the bottom and I traded off the bottom, but they just really didn't go anywhere. And
Yeah.
a couple other ones that I was looking at, I think it was United Healthcare and may have been Dow. And they kind of had the similar ones, but I didn't get on those. I just happened to pick the ones that didn't really go anywhere, and the other ones actually had nice trades there off the bottom. So hopefully I won't make a habit of that. It feels like I have been lately. But that makes sense to have the range stat. If it makes a fail stat, that's probably the bottom. But I guess some of it is just whatever happens to present itself to you first and whether or not that moves.
Yeah, I mean, that way, if you have that standard layout on all the charts that you paired, then when you flip from chart to chart, you always have your shooter's lens, your targeting lens up in the same way. Whether I'm hunting a
Yeah.
zebra or a wildebeest, it's always kind of that. And the size of the boxes are relative to each individual symbol, but it's always the same. That's the reticle or the sight picture in rifle marksmanship for us.
Yeah.
The heads up display always looks the same. It was always interesting to me is in special ops we used to work with the Task Force 160. That was the special ops aviation guys, high speed helicopter pilots, and they have bolted to the outside of it little rocket pods and miniguns, and their aiming mechanism was a grease pencil plus sign that the chief would draw on the bubble of the canopy. So he would maneuver the helicopter so that the X on the windshield was lined up with his target. Funniest thing ever, and he's got all the high speed shit. That's what he aimed with, was just. Now he had 5,000 hours flying in night vision goggles on that little attack bird, which was pretty amazing. But that standard sight picture that you can trust. It's like firing, I guess, with iron sights on a rifle. So you want to be able to.
I'm sorry.
Yeah, go ahead. I was going to say you want confidence in that simple sighting mechanism.
Well, I can see those patterns, and I'm trying to relate them to the higher time frames, but again, sometimes I think that makes it more complicated, and all I may need to have is just what the daily range is, and maybe even the day.
Yeah, if you have
3 minute.
Yeah, if you had where it closed yesterday, and yesterday's, and then you have a gap down to here, and you have those three lines. When it reverses, it could reverse from the fail stat right back up to the open, the path it just traveled, and then the next step is to the gap, to yesterday's close. So you already have that sort of standard travel distances in there, and if you've got that marked off in terms of R10 chunks, that's how big the step is. That you'll start getting familiar with that pace count. That how big is the step?
I told you a couple of weeks ago I was going to limit it to 8 sort of core universe of stocks, and I stuck to that initially, but I felt like it was too limiting, and so I expanded that to the 30 stocks, which it can be a lot to go through. And again, when the market opens, what I prepared, other things may be moving a lot more than that. So that's something that's kind of an intellectual problem area for me as well.
I feel you on that one too. I mean, I've watched. I deliberately excluded Facebook from my list, and it's been a 10 bagger in the last 2 years or a year, and I psychologically can't trade it on the long side. because I hate that lizard. I just can't do it. I can't. That
Well,
used to be the case with Microsoft and Apple, and I got over it. But I'm right now. I'm suffering with. I can't trade Facebook on the long side.
well, maybe that's
But
something that's pretty normal, is that, you prepare some and maybe they pan out, maybe they don't. And if you
yeah,
see the ones, it's just first come, first serve. And hopefully more of them will be good than not good, but that's just sort of normal
yeah,
trading
yeah. I
behavior.
mean, I've had one of the most successful things that I've been trading in the last 6 months has been IP, International Paper. But if you look at the daily charts on that thing over the last 6 months, it really hasn't gone anywhere. However, the little short 1, 2, 3 day moves after turning points have been really good. And I was surprised to see the nowhere that it's gone in the last year because it's been a really good trading vehicle in the shorter time frames for me. So,
So the trend
you,
daily may not, if it's
yeah,
trending on the daily, that's probably good. But if it's not, that doesn't mean you can't trade the 3 minute within the daily.
exactly right.
It's really
Exactly right.
it's more important to know the daily high and low, like you said,
Yeah,
rather than the daily trend if you're trading intraday.
exactly. So
Okay.
what makes like EWW and EWZ very special symbols is that they have a very high signal to noise ratio intraday. They have wide channels, big moves intraday that are directional. Um, but when they are in the swing mode, they also swing 2 to 10 days very nicely. So if you can catch EWZ and EWW at like a 30-day low and it starts to reverse, you could have 2, 3 full weeks of directional moves uh, that are each day it's making big moves and in the same direction, and you can trade it well intraday as well as carry over the swing trades when it's swinging nicely. So yeah, there's a trade-off when every time you start limiting your focus, there's always going to be some of those trade-offs of, hey, the things I prepared aren't moving, the things I didn't prepare that I'm not looking at in retrospect are moving, and that can be a little frustrating. But so
Okay. I just got to keep working on that process then. Okay.
yeah,
Okay.
I mean, I've just added a couple China and an India ETF that I've just missed the big sell-off in China from a tactical shape. But it's one of you can't get them all. All right, who's up? Jeff, do you got one?
Yes, sir. Okay, sharing my screen. Do y'all see it?
Yep, gotcha.
Okay, I'll just go over the high points of things that have changed. I added a main goal on here to automate the data gathering assess portion of the PPEA process. Looking at some Python, I'm kind of amazed at some of the cool libraries that are out there. I've heard about Python for years, never programmed in it, but there's a lot you can do with data processing and data consolidation. I'm going to ask you a question in a minute about daily rolling things into a daily R. I think it was it
Yeah.
Luke that did it. So anyway, that's coming, but that would certainly help with something like that. What did I do? I programmed the order fill code in NinjaTrader to correctly back test. It's a granularity issue, so that was a pain to find out, but I got that working. I finished my SWOT analysis, put that up on the board. I'm adding trade reentry and continuation patterns to PRX strategy 1 in NinjaTrader. And I continued working on the trading plan. Didn't do a whole lot on it, but I did do a little. What will I do this week? I am going to finish and verify the trade reentry and continuation patterns in NinjaTrader and start the Quant Connect code. I'm going to, of course, verify, though, that the Ninja is tracking with the trading view on multiple time frames and different symbols, just to make sure I have it right. Aha moment. I need to give my wife a high-level overview of my plan and progress reports to inform her of, or keep her desire for future security informed. We had a nice sit down, and I talked to her. She was I guess the impending timeframe of my ending job is starting to get real to her. So she was asking me about how this process is really working, and I explained to her, and Ken, she likes that I'm working with you and your professional and measured coaching and best practices. So anyway, it was good. I showed her what I did this week. I showed her the SWOT analysis and this document that we do, and in general, we've had multiple conversations about it, and she knows kind of what I'm doing, but it had been a while, so I think that was good. I'll make a note to keep that happening.
Yep.
See questions below. The coach's eye, doing the planning work before systems coding ensures planning gets done. Also, I tend to overestimate what I can get done when programming. Again, I ran into an issue with NinjaTrader, and so I'm putting one thing down at a time and instead of two or three. And if I get two or three, that'll be great. For accountability, I'll report back that I got the NinjaTrader coding, the backfill accuracy on that working, and the reentry continuation code working on NinjaTrader as well, and confirming that versus TradingView. And then I've started the Quant Connect. Quick questions, Ken. Some of these are real simple. Confirming that expectancy is your coin flip calculation. Is that true?
Well, it's not. It's the same data that gets you to the expectancy number.
Okay.
But what I like for the coin, what I do for the coin flip is just I look at the win rate to the loss rate, because you're going to calculate what percentage are you winning, which ones are scratches, and how many are losing trades.
Okay.
So I just take scratch trades are kind of like in the noise.
Yeah.
If you want, you can just make them losing trades. That's safer. But I like to look at the win rate versus the loss rate.
Okay, so that's
So
as simple as it is.
Yeah,
It's
and I
never-
like to express that as a
Okay.
ratio. Hey, if I get a 60% win rate, 40% loss rate, it's a 3-2 coin flip.
Okay. Okay.
Right.
Fair.
And
I didn't
then
know if it included the actual amounts won or lost, so it does not. So that's cool.
yeah, just all you need is the percentage, because if you're firing on standard patterns, hey, the next 100 trades, it's all the same pattern, it's all the same setup. I want to know what's the win rate versus the loss rate, and that's the percentage on the coin flip. And then
Okay.
the payoff rate is what the winners pay, average win, what the losers cost, average loss. So if I had a 3-2 win rate that paid 1-1, that's it. I mean, that's easy. I win 3 out of 5 for $1, and if I
Sure.
lose, it's $1. That's a like a 0.2 if I 0.2 expectancy.
Mhm.
What you'd like is like a 3-2 win rate that pays 2-1. Awesome. So when you express that as a win rate, as a coin flip and a payoff, it allows you to just kind of visualize that in terms of what the house is getting, in Vegas.
Okay.
Because their edge is about anywhere from 2 to 4% on the games that they play.
Okay.
And the payoff is 1-1 or something like that. So they're getting millions of transactions a day.
They make
So
it
they're
a volume for sure.
yeah. So they're getting the expectancy, which is
Right.
all they want. They want the reliability of the expectancy. If
Okay.
you're the gambler, if you're the mark, you want the fat tails. So when we think like the house, what we're trying to do is really lock in our risk management to ensure that we're not taking losses greater than 1R at first. And then we're looking for a normal distribution between -1 and +2. So we get a lot of opportunities in there, and it's positive expectancy. And then the third thing is, hey, we want some fat right tails once in a while to give us the icing on the cake. And that occasional reward's good for dopamine, and you feel like you're on the side of the angels, and it rewards you for taking the absence of big losses is a really affirming feeling. So that's what we mean by the coin. But yeah, then the second one, meta system, another way of saying System of systems. Yeah, correct.
Yeah,
And
so I
systems
heard you use
thinking, you
that.
have, yeah, your top level system is the blend of all your performing systems. Those systems have subsystems, like they have a planning system, they have a scanning, an entry system, a management system, an exit system, a position sizing system for how deciding how much to. So subsystems make a system, multiple systems make a meta system or a system of systems, like a golf bag with many clubs. That's how we like to think of that.
Okay,
So,
yeah,
yeah.
because I was calling mine create a system of systems, and then I heard you with meta system, and I'm like, well, that
Yeah.
makes more sense. So that's what I'm going to call
Yeah.
it. I
Yeah,
like it.
that's whichever one. The technical term is meta, but
Sure.
whatever works.
Okay.
Yeah. So now the next one there about analyzing trades rolled up. So what this is sort of a way to approach the feeling professional, the net piece. That this now has you thinking like the owner of a franchise, right?
Mhm.
And there were 75 customers came in the morning, and some of them bought hamburgers, some of them bought breakfast things, and some had coffee, and some had soft drinks. And so each little transaction had some R return. And as long as we've got, good systems that are positive expectancy, one of the things that you can do is, hey, as long as we don't have negative customer feedback, like losses more than 1 R, as long as we have generally good performance on the individual trades, and I'm confident there, I can jump right to the end of it and say, hey, for that whole day, what was our net? And so what Luke was doing was taking the total number of trades for a day and that's doing a composite daily result and treating that as a single aggregate trade of with an R result. So he might have had 10 trades. Today he had 6 winners, 4 losers. His net was 0.5. That when you put all that in a nice package and roll it up and treat the day as a single trade, the daily R was 0.5. So now when he gets 30 daily trade roll-ups, he gets a feel now for what's a 30-day period executing all of these systems look like on a net basis. So he rolls it up into daily, weekly, and monthly buckets. And then he can track that as sort of a portfolio equity assessment, and it allows you to look at it from a higher level a little more simply. You can actually see the dollars moving up,
Right.
and that gives him a way to reduce the individual stress of any one trade, of it having to be the right one and falling in love. It's one trade of the next 1,000. So if he's doing 10 trades a day, 1,000 trades is 100 days is a quarter. So he'll get to 1,000 trades, and rather than sweating bullets on each and every little, as long as he's following his rules and the histogram is showing no trades worse than -1, and the average win is this and the average loss is that and the coin flip is this and that, and he can look at the daily performance as just getting the the bottom line report. Hey, assistant manager and store manager, I trust you to run your business. I just need to see your bottom line, and that allows him to pick that up.
Is there any utility in actually using a daily roll-up for position sizing, other analysis, or is it primarily a psychological
I
tool?
think it's both. When you're at that level of proficiency, now it actually does make more sense to start looking at the size of the trade, uh, the standard unit of risk per trade, to decide if I want to start risking. If I'm at $10 and I want to double my return, I can just increase my risk per trade to 20 without changing any of the architecture of the system. So it's and
Yeah.
just buy a bigger generator. Yeah, and
It's obvious that as you go from trade to day to week, the noise goes away, your SQN gets a little better, your expectancy goes up, assuming
Yeah.
it's a positive set of systems.
yeah,
So,
and what
yeah,
it does is it really does treat you. You then adopt the mindset of a district manager
right.
with 10 with 10 franchise locations, each one using sort of standard work. But once those machines are running, you can now take a look at what the equity curves of different systems look like to decide where you want to start putting discretionary money. Which one am I going to start overweighting? Because now I have enough data to
Mhm.
see what they're performing like longer term.
Okay,
Yeah.
very good, thank you. And the last one, I struggled a
Yeah.
little bit with the SWOT analysis sections 2 and 3,
Yeah.
those are the bottom two.
Yeah, 2 and 3 are harder. So
I
uh
I didn't know
section
if they were,
3,
I'm sorry,
yeah.
go ahead.
So section 3, now remember the strength and the weakness are is a result of your internal assessment.
Right,
The opportunities and threats are the environmental assessment. And now we're just comparing those. So when I go to area 3, what I'm looking for is an opportunity that presents itself in the world to work on my own weakness,
okay,
to strengthen my health. It's like, oh, there's a very efficient, low cost way to, I can go do a daily walk on the walking trail that the city has already provided for me at no cost. And it gives me a chance to do meditation, get some exercise, wake up in the morning and get all that knocked out. So that is a low cost way to work on a weakness if health or stress management was a perceived weakness. I would rather do that than, well, I could spend $1,000 a month on a personal trainer to come into my house and yell at me to do calisthenics under supervision, or I could just go for a morning walk and I could bind myself to a couple people in the neighborhood that all want to walk together. And now I've got some positive reinforcement, social connection. We're there for each other. I've got accountability partners. So what I'm looking for in 3 is a low cost way to take advantage of an existing opportunity with just a little nudge to improve a weakness. You know,
gotcha.
like I want to trade so much that I am tempted that I'm ready to trade an hour before the market opens, and I've been monkeying around with pre-market trading, which doesn't follow the same kind of dynamics as the regular market hours, and my system's not working. It's like very frustrating. So I could just avoid that and go for a walk with an accountability group, and then I come back ready to trade. And because I did that, I'm not doing morning trading, and now I'm ready and relaxed to trade the actual morning session. So that would be an example of a low cost strategy to improve a weakness and or eliminate a gripping point that a threat could take advantage of. So sometimes the things that are in category 2, I have a particular self-assessed weakness and the environment is representing a significant threat to me, like the threat of pre-market trading. Well, I can move away from that and take care of a health related issue and kill 2 birds with 1 stone in a very low cost way. That way, I don't even have to use one of my strengths to deal with a weakness. I can use my strengths to work on things that are going to give me the huge payoff, like programming is a strength of yours.
Right,
You don't need to write a Python program to not trade in the mornings and a Python program to cause you to take a walk.
right,
You can reserve your Python programming for procedures, you know, to seize an opportunity in category 1 or to prevent, a loss in category 4, something like that, where
right,
you're using programming to defeat the traders on the other side. So,
sure.
so that's how you do. So now in 1, 2, 3, and 4, those categories, you're itemizing things that you could do. and they turned out to be different kinds of strategies, different mindset. And then in 5, you're trying to say, well, I got all these individual things I could do. What's the mix look like? And usually I try to get 1 or 2 from each little area, but I really want to get the big wins. But I also want to work on my own weaknesses. And if I can just do that, I'm going to just be better.
Sure.
So this gives you a way to not just do the things you want to do, but do the things that you should do.
Yeah,
Without,
it
yeah.
really did bring forward a couple of ideas I hadn't thought of. I was like, wow, okay, that was good. That was worth doing. Yeah, as silly as this is, I got that the 1 and 4 were, matrices. You just strengths on your left, opportunities on the top, drop it down. My brain
Yep.
didn't catch on to 2 and 3 also just being, weakness on threats, weakness on opportunity.
Yeah, each one
so
that's sort of when you start comparing those, you start getting those keywords. It starts triggering the creative sparks. And how could I write a story that features both of those, a strength and an opportunity? And you just throw them in there, and then your storytelling brain will start finding imaginative ways to do that.
it was worthwhile. So even though I kept putting it off, I'm glad I did it.
Yeah, it really does. It makes sure that you've looked at it from all the different angles, and then the blending. So if you think of categories 1 through 4 as the divergent thinking, convergent thinking, when you pull those together into a set of things that you can do that are affordable in terms of time and effort, that's what category 5 is. How you start putting those into a action plan, short, medium, and long, priorities 1 through 10. What am I going to do first? Is there any synergies that I can do? Can I do a couple things without harming the other one? Is there anything that blends? Yeah. And that's how you get that
Yeah. No,
that little thought process going there.
yeah, it really did help. Like I said, I agree. It helped me figure out strategic priorities, what I need to be doing in what order. I'll probably go retweak these 3 and 2 or 2 and 3, but yeah,
Yeah.
it was good. So thank you for that exercise.
Man, that's a beautiful piece of work right there.
Well, Ben, back to my wife. I showed it to her and she's like, let's a little busy. And so I said, well, yeah, okay. And I was explaining it to her. So then I thought I'm going to color code this because I agree. I'm going to tape it up next to my wall. And so I went ahead and color
The
code.
next thing that I'd have you do, the next thing I want you to do is get a blank sheet of paper,
Uh-huh.
like a 5x8 card, which is a nice thick weight,
Okay. Yes.
and a nice pencil, and just start sketching what the solutions look like in a cartoon form.
Okay.
Just draw some pictures, free form of what that feels like as an impressionistic painting sketch.
Of the whole
What
thing, or
that'll
just the solutions.
Yeah, what that'll do is give you a gestalt snapshot of what success looks like. When I do that, what's that look like and how does it feel? And just do a free form sketch for yourself. Don't show it to anybody.
Okay.
But just get some imagery and relax a little bit from that analytical Python programming
It's
spreadsheet checklist mentality. Loosen up a little bit.
I am deep into it, aren't I?
Well, it's not like I don't know exactly how that feels,
Sure.
but I find that the sketching very freeing. Process maps and fuzzy pictures and shading, and pencils are perfect for that because you can erase them and smear them and smudge them.
I was interested in the next exercise in foundations was the one where you sketch out the trading path or journey. Am I remembering that right? With the river and all of that?
Yeah.
I thought that was pretty cool. I haven't done it yet, but I thought that would be neat.
Yeah, for me, I made a sketch of the best one I've ever done was the picture of the water mill next to a river, turning the wheel, which turns the millstone, and which also is connected to a drive shaft, which has a power takeoff lever to drive spinning jennies when we're grinding or making cotton or whatever the fuck they use that for. And then that became a sketch. Well, where did the river come from? Well, it came from the mountains and along, and there was clouds and And this became a whole ecosystem of water and storage and how irrigation and the village that was there and how the farm was connected to the mill and to guys that have wagons drawn by horses to carry it to the next village to bring back items and trade. And pretty soon it became really clear how the grinding of the millstone, which takes water power to do that, which takes a whole village to put that thing into operation, was central to the success of that entire organic uh, ecosystem. And I could relate to how the different parts of my trading had a place in that landscape, including relaxation and meditation and spiritual purpose and um, ultimate purpose, going back to the mountains and to the far side, to the whatever that next adventure is, without fear. At but all in its time. And then meanwhile, what's going on in the valley and the role of getting all that well ordered. Uh, so the analogy of the water cycle in the village near the mountains had a profound impact on me about doing the work that was needed in the right time and the right location. That there was a time and a place to do all those things, and I'm going to get to them all, but I attend to it in the right sequence. Um, that was that helped me get on with the long term journey of doing all the work in the right time and not just the things that I like to do. You know, uh, be the mayor of that whole area, the caretaker, the tribal elder, and that kind of stuff. So uh, when I sketched it out for a soccer club, it resonated with me too because I'm a soccer coach and I run our organization here in the town, and I'm doing it for kids, but also parents and all that stuff. That whole metaphor helped me look at all the parts of my trading plan, the business side of it, the long term seasonality of it. Those are important things. That's why sketching will help you get it all on paper and all the dimensions, so the rough visual outline. Your programming will fill in all the pieces, but you want the dimensions. Give yourself enough room to sketch that out and leave some white spaces for the programming work to be done.
Will do. Thank you.
Next man. Who's up?
I can go quick.
All right, Joe, let's go quick.
Summary info, and I just asked to sit in and see what everyone else is working on tonight. But it's great to see your work, and I will just say that my work has involved consolidating all of the investing and trading data I've accumulated over 30 years in useful format while not losing sight of Kata 2 challenge in any way. And I'm happy to say I've made some very good progress on that and finding trade systems that I employed in a financial advisory role and being able to pick bits and pieces out of there and say, all right, how can this complement what's going on, or has the market changed too much for this to be useful? And I'm getting a lot of good insights to that. So I can tell you guys that I'll have that in some bullet point format for a future call or two, some things that really resonated with me and actually did well for me in my business through the years, primarily on early entries for trends and things like that, looking more at the long term when I'm managing other people's money. But I really do feel that taking a technical approach is the right way to go in this world we live in right now. I think getting married to themes and hypotheses is a dangerous game to play. And I in training new people, I always tell them fundamental analysis is what should be, but technical analysis is what is. And, you know, we need to live in what is. So I'll do some refining on that and put something useful in front of you guys in weeks to come. Thank you.
Cool. All right. George, you ready to bring us home?
Yep. So I'll share some of my statistics about all the data I've been collecting. So since I started, can you see my screen?
Yep.
Oh. That's interesting. Since I started way back in September, this is a scatter chart of my trades. So I have the results of each trade. Now I'm collecting the entry date and time, so I can analyze if I have a good time to enter or a bad time to enter. And then these are my most recent stats. I had a big winning streak last couple weeks. So currently the expectancy is 0.3. Average win is 1.8. Average loss is minus 0.2, and the win rate is 27%. So I track the pattern and the time frame. And this is a histogram of my recent trades here. And as far as what I'm working on, I'm just continuing working on 30-minute charts and trading every day.
Yeah, go to that one by time of day. Yeah, that one strikes me as significant too, that the not getting caught in the early shenanigans, but letting that first burst happen and the smoke clear, but still getting in early enough to take advantage of the morning moves. I think and somewhere around that an hour in, that's like slow frog, somewhere between the quick frog and slow frog. Feels
So I developed a rule about that, quite surprisingly. And the rule is I take one trade in the first 30 minutes, and
Yeah.
then probably if it's a winner, I can take another trade in the next 30 minutes. And depending on how those go. So that's been working really well.
I like that.
I guess what it's done, I guess one of the learnings there is, since I know I'm only going to take one trade, I think long and hard before
Yeah.
I don't just
I gotta
jump.
hurry up and shoot that shot.
Yeah, I don't jump on the first thing that's moving.
Well, that's where my mentality of the 4 bullets a day came from. Is my dad would give me 4.22 long rifle bullets to go shoot rabbits. And if I shot at the 4 shots of the fastest ones I could, I could be, well, not gonna. It was really make the first one count, and be a lot more deliberate, disciplined, and stalking. If we wanted to eat, if I wanted more ammo, I had to get 2 rabbits so we could sell skins for ammo. So that discipline of respecting the ammunition you have is key. Yeah, I think you're on the right track. And I would also take a look at reach out to Luke. He's got a little process in a spreadsheet where he looks at a rolling 30 trade expectancy and a 60 trade expectancy and a 90 trade expectancy. So short, medium, and longer term batches. And he's looking at the time series of that rolling expectancy, which helped him know when he was okay and on the trail. Yeah. So yeah, that rolling expectancy on the 30, 60, and 90 gives you some steerable indicators on your instrument panel. So I think you're in the right, you head in the right direction here, and we want to maintain the discipline that's been paying off the last few weeks.
I did have one question actually. For
Sure.
the average win and the average loss, basing these on the last 30 trades.
Yeah.
Do you base it on the last 30 trades or the last 30 wins?
30 trades. Like I would do the well, like you could take, like if you wanted to, oh, I see. I think I see what you're saying. If you take the last 30 wins, and what is that average? And the last 30 losses, what's that average? That's probably a fair way to do that.
Okay.
The expectancy, the rolling 30 trade expectancy takes care of the mixing the wins and losses, but that way you get a sense of you want to look at those as two separate things. Like I really am concerned, am I cutting off the wins properly? And then on the or cutting off the losses properly. And then in the wins, am I letting them breathe, letting them go?
Mhm.
And then on your winning trades, you want to be looking at your maximum favorable excursion while in the trade. Am I staying too long or am I prematurely cutting them off? And we can work on that in the near future. Okay. All right. I got about 9 minutes here before I gotta hit the road. Any last call for alcohol here? Yeah, there are two things I'll just draw your attention to that were in Patreon. There was a post I made earlier today about maybe it was yesterday on the Z scores of the RL 90, 30, and the 10. I posted some historical references in there. What was the maximum and the minimum over the last 10 years? And what it really shows is how extreme the RL 90 really is. It's at the 99th percentile. It's like 2.57 Z score, which is the second highest it's ever been in the last 10 years. And that tracks with the feelings of professional money management class. Like I sent around a note on Patreon today about that comes out of, it was a Goldman Sachs analyst wrote up and said, here, and he made about 25 different things that he tracks that shows the market is overextended. The problem with that is that psychology shows that the more detailed the data is, the more extreme your position about it becomes. Like more data just confirms your confidence that that's right, and it may not, they may be measuring the same things, but now you're 10 times more confident that the one thing that's there is really there. So the essay really showed a lot of different ways that pro money managers are measuring different kinds of things. And I could imagine how, I was imagining 1,000 different money managers, each with their own little set of personalized chosen indicators, none of them identical to each other, but all of them generally reading how the market is overstretched. And the Z score of the RL 90 captures all of that. It catches every turning point in the big broad market that is moved by institutional money. It found the turning point when in November when the price was at 410. It identified that we were at a really critical state, that it could get really bad in a hurry if it failed, but it didn't, which meant that it could be just reversing. And it turned out to be a 4 sigma move up to a price of 500 in SPY, 20% move. And that 4 sigma move is a historically large number, which I know because the Z-score, the 90 period regression line, is 2.55. The RL30 had peaked earlier, but pulled back and is just starting to run. So it's almost like a COTA 2. So there still is some short-term upside to this thing, which tells you the longer-term guys are shitting a brick because they don't know how long it can go. It certainly can't go any further. But the shorter-term one says, yeah, there's still some wiggle room in this for things to go. And the bottom line is that we're not bound by the same constraints of very large institutional money that maybe by contract have to be invested in something. So they have to pick something to be in, whereas we don't have to. We could be in anything if we want to. And we can set position stops that take us out if the threshold is hit. And now we're out of that position altogether, whereas maybe they can't do that. So knowing what our strengths and weaknesses are compared to theirs gives us the ability to be more flexible. But what really struck me as being important was that a very simple dashboard with those Z-scores of the regression lines is giving us a really strong set of information to base our strategies on. It's good dashboarding to have a really good control panel that have simple, clear indicators. So that's in support of what Juan Carlos is looking at. And I would just tell you those Z-score, that's the most important chart. That's the most important page in that daily, is just watching where we are on the short term, midterm, and long term. The 10-day Z-score tells you where the immediate opportunity for sharp reversals is for intraday trading. And then the 30-day is giving you some swing trade confirmations. If both of them are down and both are starting to turn, you got a lot of upside. And then the 90 performs that same function for the much broader large market for our core positions and long-term swings and big turning points that give us long-term bias for directionality. So that's one essay that's on. The second one is I had the Koala Writer, which is my front end to trigger Chat GPT-4 Turbo. I have an account there, and the Koala Writer is a very good research and writing piece of software that sits on top of GPT. So I gave it some leading questions about SWOT analysis, and it provided a very nice summary that would do a consultant of organizational development, which I am, a very nice piece of writing that gives you a little more insight into what SWOT analysis is and how it can be used in business and just for our professional edification. So that's in the small group counseling course. It's in the resources and reference lesson where I put the VWAP essay. That's where I'm going to put essays that seem to be appropriate for our group as we go. So I posted that on Patreon also. So just a couple more things for you to monkey around with if you need something to read. All right. Keep up the good work, guys. And we'll see you shortly. And I'm trying to whenever I am doing good material in the foundations, I try to get that posted into your small group coaching section as well. But I think you're all in foundations as well. So keep up the fire, and we will see you shortly.
Thank
Take
you.
good care.
Thank you. Good night.